If you want your money to grow fast and grow tax-free, nothing in the financial system beats a Roth IRA. But most people never use it to its full potential. Today, I'll show you how to turn your Roth IRA into a high-octane, tax-free growth engine that compounds for decades, without stress, without complexity, and without guesswork. Hi, my name is David. Before we dive in, let's take a quick look at the account type ingredients that power a true second-act investor portfolio engine. 1. A 401k, your core stability engine. The foundation of your entire system, built for consistency, discipline, and long-term strength. 2. Roth IRA, your pure growth engine. The tax-free powerhouse where your highest conviction growth assets compound for life. 3. Retail brokerage, your tax-efficient dividend and growth overflow engine. The flexible wealth builder that captures qualified dividends, long-term gains, and overflow growth once your tax-advantaged accounts are maxed. 4. Health savings account, your triple tax advantage medical wealth engine. The only account that gives you tax-free contributions, tax-free growth, and tax-free withdrawals for qualified medical expenses. 5. High-yield savings account, your liquidity, safety, and emergency buffer engine. Your cash shield, stable, accessible, and ready for life's unexpected moments. Today, we're breaking down how to design your Roth IRA as a true second-act investor growth engine. Let's start with the part most people overlook. The Roth IRA isn't just another investment account. It's the only place where your money grows tax-free, your withdrawals are tax-free, and your future self keeps every dollar of growth. That's why every decision you make inside this account matters 10 times more than anywhere else. And if you're filling it with slow, low-growth investments, you're wasting its superpower. Design your Roth IRA as a growth engine, a rocket ship fueled by compounding, innovation, and tax-free acceleration. Here's the rule I live by. Put your highest growth assets in your highest growth account. Your Roth IRA should be the home of growth, innovation, momentum, quality growth, secular trend exposure, long-run asymmetric upside, crypto. Because this account is built for compounding, not collecting income. And here's the part most people get wrong, not knowing what doesn't belong in a Roth IRA. Dividend ETFs, value funds, bonds, covered call products, high-yield anything. Those belong in other accounts. Your Roth IRA is your rocket engine, not your income sleeve. Quick disclaimer, I'm not a financial advisor and nothing here is financial advice. I'm simply sharing my personal journey, the mistakes, the lessons, and the systems I've used to rebuild my second act. Investing always involves risk, and past performance never guarantees future results. If you need personalized guidance, reach out to a certified financial professional who can help you build a plan tailored to your situation. Now, let's get back to learning. How do you build a Roth IRA that truly compounds over time? The secret is to follow the second act investor's growth engine design, a disciplined, straightforward structure built around 4 distinct growth sleeves. Let's start with the foundation, your core growth and momentum sleeve. This sleeve is the engine that powers most of your long-term compounding. It's built for broad, diversified exposure to large-cap growth, momentum, and mega-cap technology, assets that thrive on innovation and market leadership. Think of investments like SCHG, Schwab U.S. Large Cap Growth, VUG, Vanguard Growth, MGK, Vanguard Mega Cap Growth, QQQM, Invesco NASDAQ 100, SPMO, S&P 500 Momentum, XMMO, S&P Mid Cap Momentum. In my own Roth IRA, the core growth and momentum sleeve forms the backbone of my portfolio. Here's how I allocate it. SCHG, 35%, SPMO, 25%, XMMO, 20%. These three ETFs deliver broad growth, systematic momentum, and mid-cap upside, all within the most tax-efficient account I own. By focusing your Roth IRA on high-conviction growth assets, you unlock its full compounding potential. And yes, looking back from February 2026, my core growth and momentum sleeve has outperformed the S&P 500 over the past decade. By focusing on high-conviction growth and momentum ETFs inside my Roth IRA, I've captured stronger long-term returns than the broad market, all within the most tax-efficient account I own. Next is the Aerospace and Defense sleeve, a small but powerful 10% allocation. This is where you capture long-term upside from global defense modernization, AI-enabled warfare, cybersecurity, drones, space systems, and other secular trends that aren't tied to short-term market cycles. Aerospace and defense isn't a fad. It's a multi-decade global priority, driven by rising geopolitical tension, NATO modernization, and massive investment in next-generation technology. Examples of ETFs in this category include SHLD, Global Defense Technology, EUAD, European Aerospace and Defense, PPA, United States Aerospace and Defense, XAR, Equal Weight U.S. Defense. NATO, Themes Transatlantic Defense. In my own Roth IRA, this sleeve is simple and focused. SHLD, 5%. EUAD, 5%. This gives me exposure to global defense technology, a long-run secular trend with asymmetric upside, inside the most tax-efficient account I own. The third sleeve in my Roth IRA is dedicated to nuclear energy, a focused 5% allocation designed for asymmetric upside. Uranium and nuclear energy equities offer one of the most distinctive return profiles in the market. Extended periods of quiet, flat performance. Sudden, explosive gains when the cycle turns. Multi-year parabolic runs. High volatility. Minimal dividends. This unique combination makes them ideal for a Roth IRA, a tax-free account built to hold high volatile and high upside assets for decades. Examples of uranium and nuclear energy ETFs. URA, Global X Uranium. URNM, Sprott Uranium Miners. NLR, Van Eck Uranium and Nuclear Energy. NUKE, Roundhill Nuclear Renaissance. HURA, Horizons Global Uranium, Canada. In my own Roth IRA, this sleeve is simple and intentional. URA, 5%. This allocation delivers precision exposure to the long-term nuclear renaissance, a secular trend with explosive upside, amplified by the most tax-efficient compounding engine I control. Fourth is the crypto sleeve, a focused 5% allocation built for pure asymmetric upside. Crypto has three defining traits: high volatility, high momentum potential, asymmetric upside. A Roth IRA is designed to maximize all three. Bitcoin moves in multi-year momentum cycles, accumulation to breakout to parabolic run to reset. When those cycles hit, the gains can be enormous, and inside a Roth, every dollar is tax-free. No capital gains, no short-term tax, no long-term tax, no tax on withdrawals. This is the perfect home for an asset that can grow 3 times, 5 times, or 10 times. Crypto. ETFs like FBTC and IBIT are pure growth. 0% dividends, 0% yield, 100% price-driven returns. Exactly what you want in a Roth. No dividend drag. All appreciation compounds tax-free. Crypto is one of the cleanest growth engines you can place in a Roth IRA. It's also momentum-driven, and Roth IRAs reward momentum. Long holding periods. Zero tax friction. Ability to ride full cycles. Finally, crypto adds a fifth macro driver to your Roth: digital scarcity plus global liquidity cycles. This boosts portfolio resilience, return stacking, long-run compounding efficiency. Crypto behaves differently from growth stocks, defense, and uranium, and that uncorrelated behavior strengthens your Roth IRA engine. The Second Act Investor System works because it removes the two biggest threats to your wealth: emotion and inconsistency. A rules-based Roth IRA does four things exceptionally well: keeps you invested, keeps you disciplined, keeps you focused on long-term compounding, protects you from reacting to headlines and market noise. You're not guessing, you're not chasing. You're following a system that compounds quietly in the background while you live your life. If you want to turn your Roth IRA into a high-octane growth engine, here's the blueprint. 1. Define your growth sleeves and choose ETFs that match each one. 2. Automate your contributions. Take away indecision and emotion. 3. Never rebalance by selling. Rebalance with new contributions. 4. Trust the Second Act Investor System. Set it and forget it. 5. Think in terms of decades, not days or weeks. This is how you build wealth without stress and without needing to be a market expert. Keep contributing, whether the market is up or down. That's dollar-cost averaging. To help you get started, here is how I designed my Roth IRA growth engine. Large Cap Growth, SCHG, 35%. S&P 500 Large Cap Momentum, SPMO, 25%. Mid Cap Momentum, XMMO, 20%. Aerospace and Defense, SHLD, 5%. EUAD, 5%. Nuclear Energy, URA, 5%. Crypto, FBTC, 5%. The Second Act Investor Roth IRA is a high-growth, high-momentum, high-convexity engine. Its long-run return potential is meaningfully above a traditional 60-40 portfolio, and even above a plain growth index. As of February 2026, this portfolio has outperformed the S&P 500's total return over the last decade. If you want to explore the historical performance of each ETF, use the free calculator link I provided in the description below. It lets you see total returns over custom timeframes, so you can understand exactly how each sleeve has performed. If you find this information helpful, hit subscribe and give this video a like. It helps the algorithm share this content with more people. I appreciate your support. And if you're ready to keep building wealth, watch the next video: how to turn your traditional IRA into a tax-deferred, long-term dividend growth engine.